If you bought a barrel of oil in January of last year at around $56 per barrel, by today you'd have made over 30 shillings, being over 60% of the price of oil. In principle, the price of oil has been going up and higher in light of a bullish run that is across the globe. This is Markets Today, and I'm your host, Mugendi. Today, we will talk about commodities including oil, gold, and several other commodities that are traded locally. Welcome. Before we delve into the conversation, we will start you off with the day's trading numbers, starting from the gainers, the losers, and the movers of the day. Start with the gainers. Williamson Tea topped the chart with 9.51% increase, landing at 77 shillings. Nairobi Business Ventures is still topping the charts, having traded closed the day at 1 shilling and 3 cents, and that being 6.19% upwards. Crown Paints closed the day at 100 shillings, being 5.26% of its initial price. Olympia Capital did 4.55%, closing the day at 23 cents up, and the Cooperative Bank closed the day at 7 shillings 40 cents, being 4.23%, closing the list of the gainers. The losers of the day were BOC Kenya, shed off 8.97% to close the day at 4 shillings 97 cents. Everready East Africa also had a rough day at the market, shedding off 7.45% to land at 1 shilling 24 cents. Kapchorwa Tea closed the day at 50 shillings 50 cents, being 5.91% and percent lower. And Uchumi Supermarkets closed the day at 3 shillings and 2 cents, being 6% lower. And Britam, is that Britam Holdings? Yes, closed the day at 130 shillings 25 cents, being 4.93% lower. On to the movers of the day. Again, the list is almost the same. I think the only entrant there is East African Breweries. But even East African Breweries is a common figure in the list. KCB Group did 5.5 million, Safaricom 2 million, East African Breweries 1.2 million, Kenya Power and Lighting Company 267,000 shares, Equity Group Holdings 189,000 shares. All right. I'm joined today by Cedric Mungai.
Mugendi.
Sorry, Caleb Mugendi. My apologies. I'm baptizing you on air from Nabo Capital to join us today to talk about commodities. Is it the place to be, the safe haven, or the shark tank? But before we get into the commodities, Caleb, just a commentary of the market today. We have a tradition of just a commentary on the market before we go into the conversation.
Okay. Well, we've seen the market come off, especially in the equities market from the start of the year. We had a lot of jitters, especially globally, given the Federal Reserve. The US Federal Reserve met yesterday, and they basically said that they'll continue raising interest rates and almost like guarantee that there'll be an interest rate hike in March. So because of that, a lot of investors have been exiting our markets, going back to their own advanced, maybe foreign investors to advanced economies looking for yield. And based on that, the Federal Reserve commentary that interest rates will continue rising during the year, to combat inflation. Also, there's also a bit of jitters in our market, given it's an election year, so a lot of investors are risk off. So we've seen a come off of prices in the equities market. So for that one, you have to really look at the value, looking at value stocks, possibly earnings for banking sector stocks. Safaricom, again, given it's more sensitive, is a bit of a growth stock, has really come off from its highs earlier in the year. Look at the fixed income market. Yields have been fairly stable, but they're also expected to continue on a rising trajectory. So we're also expecting a lot of investors to turn their portfolios to a bit shorter term tenors. Again, looking ahead at the risk of the election risk and the like.
Yeah. So you're saying that foreign investors are flying away from our market to go buy bonds in their countries?
Basically, when you look at how they're looking at it, are they going to take on any frontier market risk, and yet interest rates are rising in the advanced economies that is being championed by the US. So they do expect, again, with the increase in interest rates for treasury yields in US treasuries also rise, and that is some of the pool of capital, necessitating the pool of capital from some of our markets, and that's what we've been seeing.
Yeah.
Owing to that scenario.
All right, makes sense. Several analysts point at a potentially great year in commodities, whether it's in oil, gold, or any other. What are your thoughts about this? Is this accurate?
If I can start with oil, we saw oil do a very good performance last year, but as you know, last year it was mainly on the reopening of the economies trade. As more economies reopened, there was more need for oil. People started traveling again. You know, the skyways were closed now. People can travel to various destinations. You know, with all those travel advisories and limits. But now that came out last year. It was dropped last year. So a lot of this propelled oil higher during the year. We still expect start of the year to maintain in the same direction, given again demand is still outweighing supply. But as the year progresses, I think that the demand supply imbalance will start to come off, and we might even have more supply, because obviously at higher oil prices attract
more supply.
Attract more producers. I think the shale oil will now be picked up again in the US, the fracking of shale oil. So supply is also expected to come back into the market, and I think that will cause a bit of a stabilization, though we are already up around 10% from January in oil prices. So I think that it will continue maybe for the first half of the year, and then maybe in the second half of the year we might see a taper off.
Yeah, but I think yesterday and today I saw the prices ease off.
Yeah, just it's quite volatile. Ease off, they come off a bit. I think it was just about to reach $90 per barrel,
yeah.
And then that's when it started to come off a bit. But given that we started the year at around $77 per barrel, that's already almost 12% in the span of 1 month. So it's still the same. There was a bit of a trend with Omicron last year, when we expected it to also cause us back to shutdowns and lockdowns, but it seemed like a passing wave. And I think that also continued to play into the story and the narrative that the demand for oil and travel and will continue to rise this year.
Is getting better this year.
Yeah.
You said you're starting with oil. How about the others?
Looking at gold, for instance, gold is it's quite sensitive to a lot of things in terms of it being viewed as a safe haven, combat for inflation in the US, and inflation rates are rising in the United States. And then on the flip side, also with high interest rates in the US, and gold does not yield any interest. investors also tend to shun it because it's not yielding anything. So
it's
for
just
gold,
a place you park your money safely, but you're not producing anything.
Yes. So for gold, I think I will, until it becomes a bit more clear, I don't have any. For me, it's a bit more of neutral. That's also for other precious metals. Looking at things like coffee, which is another agricultural goods, they're mostly demand and supply driven for those particular commodities. Again, if there's something that happens to a major producer and the demand goes down, the supply goes down and the demand stays the same, and the prices will tend to rise. So I think also with the reopening of the economy and the world economic growth continuing on the upward trajectory, then commodities should also do well in this cycle.
Are you guys at Nabo Capital investing in any of these commodities? Because everyone keeps telling me it's a good place to invest, but I'm not seeing a lot of activity in it in this country.
I'll say there are a lot of some challenges. If you look at even our Nairobi Securities Exchange, what can you use as a proxy for commodity investing? You do have the agricultural stocks. You do have the Absa Gold ETF. Is there anything else? Just from the top of my head, that's what I'm coming. So just a few sectors. You have the agricultural sector, maybe.
There's the energy sector. I don't know.
And there's also Total in the energy sector. Actually, Total is a good example.
After Kenol went rubies.
Yes. So now, if you want an oil play, then you can look at Total. Issue possibly might be, is it liquid enough to sustain you coming in? Maybe how liquid is the stock? Those are some of the concerns around it. Especially, at least Total is a bit better, but especially for some of the agricultural stocks, that might be one of the concerns.
Caleb, you've managed me effectively because you haven't answered me whether you guys are investing in commodities.
We do look at the listed sectors like Total.
So you're strong on regulated markets.
Yes, we're strong on regulated
Why
markets.
don't we have a robust commodities market in Kenya?
Well, maybe if I can just draw some parallels with the Ethiopian market, which has a good commodities market. Ethiopian agriculture being the main economic activity, so you have a lot of farmers, a lot of people who are interested in that sector. They've already been able to develop systems, automated systems, the clearinghouse, how to clear and whatnot. We do have a lot of instruments. We have forwards, futures, where we can actually be able to trade.
Locally or in Ethiopia?
No, I'm saying globally. Even in Ethiopia, I'm sure that's also the case. But globally, like you can trade so many commodities, hogs, coffee, juice, all these things on an exchange. But now when we come locally, we yet don't have that infrastructure. But one of the reasons maybe is there hasn't been that much of a push towards bringing that market to everyone. Maybe also because of also in terms of the agricultural sector. Let's say we enter into an agreement with you that I'll supply you maybe a bag of produce or something at a certain price in the future, 1 month from now. But 1 month from now, the price rises, it doubles, and there's no regulated market, there's no clearinghouse, there's no controls in place. What will I do as a seller or as a farmer with the produce?
You sell at double the current market price.
Yes, you sell the current market price. But what happened
at my disadvantage as the buyer?
As a buyer, because you already came into that contract, and then you won't pick his calls and whatnot. So again, it's about a bit more regulation, a bit more transparency, systems in place, clearing houses. All that is infrastructure that needs to be developed for a robust commodity markets to be in place.
But we already have a coffee exchange and a tea. I think the tea one is in Mombasa.
No? Yeah, the tea one is in Mombasa. I think they do weekly auctions on price and whatnot. Again, given though it shouldn't be a hindrance, given a lot of this is for export market, but even locally consumption, we should be able to have a greater access to those exchanges. So the infrastructure can be upgraded.
Yeah. I've had regulation, I've had infrastructure, I've had a robust futures market, you know, so that we need to ensure that is in place before we can have a strong commodities market.
Yeah.
Interesting. I saw a story about tallow oil pumping in another 600 million in Kenya to ensure that their business here makes sense.
Yep.
What do you make of this?
Well, tallow were initially in the exploration stage of looking for oil in Kenya. They've done a lot of work in exploration, found a number of oil fields that are commercially viable. So I think one of the reasons why they put in money of late, you see that they also see oil prices are higher, so they'll be able to sell at a better price once they churn out the production, or once they start production. At least the price makes sense. Also, I will say, given because 500 million, that's like $5 million, and they say in their disclosure that they've already invested almost $1 billion looking for oil fields in East Africa, in Ghana, and the like. So it still seems like it's not a lot of capital, but it's still an additional capital injection just to move it from exploration stage to production stage.
In principle, you can almost say it's immaterial.
Yeah, but yes, it is a lot of money.
Because it's money coming in.
Yeah, there's still money coming in.
Have these guys made a single shilling since they came here?
I would say in exploration, you're just burning cash, because you don't have the produce yet to sell.
10, 12 years later.
That's why in exploration is usually long term, and there's a lot of hits and misses. So
and capital intensive.
So it's very capital intensive. Yeah. So you'll need a lot of capital, either equity or you raise funds, but usually equity, and you also need your financial backers to also take that long term view alongside you. Yeah. Because as you see, things can plummet. Like last year when the price was at 20 or 30, maybe 2020 when it's at 20 and $30 per barrel, it didn't make economic sense to continue exploring. So obviously that time now people will say, hey, your business doesn't make sense, so you just hang on for a bit. But now at least when the prices are higher, 70 and 80, they can show that it's economically viable to continue exploring or start production. Yeah,
although they are reducing their investment in Kenya day after day, because I read somewhere again that the initial plan was they invest $3 billion in Kenya, $3 billion in Kenya to make it viable. Now they are investing piecemeal, like $5 million.
$3 billion is
it's good money coming in.
It's quite a lot. that's quite a lot. I think also based on either the quality of the oil that they've got, or the metrics, how expansive the oil fields were, then they were able to rejig and reorganize and see how much they actually could put in. Yeah. I think also given it's very capital intensive, shareholders may not have been willing to put in additional funds without any return. So were they able to maybe get some funds from elsewhere, like debt or something, to assist in this exploration phase? Because as you said, it's capital intensive and you don't get any or very minimal revenue from what you put in.
Yeah, what I hear is it's a corporate complication. I'll leave it at that. But the Kenya government had given them until December last year to provide a viable business plan to operationalize the commercial oil production in Kenya. Do you think they deserve a renewal of that license?
I think so, given basically they lost a year to COVID. That's 2020, and again at that time the oil prices were so low. No one even wanted to look at this. No one even wanted to look at it keenly. So, given that, they can argue for maybe a lost year and then extend it for 1 year.
Like they be given 2022, if they don't get it here now,
Yeah,
they can consider elsewhere.
yeah, now can consider elsewhere, because at least now, at least for this last year when we reopen and this year, that should be good enough leeway.
Okay. I think we'll take a short break because our time does not allow us to continue.